What's up, guys? We're going to give everyone a couple minutes to join and then we will get started. All right, guys, we're going to get started. People will join as we go. But man, all the people in the signals chat think they're too good to be in. Well, Pinky's here and Jojpo, if I'm saying it right. All those other people.
You're saying it right, Brad. You're saying it right.
Okay. All right. All those other people think they're too good from when they were in because they were in the other class. All right. All right. Thank you, Pinky. Full support. The rest of them thought they were too good for the other, or they're too good for the basics class now that they got the full mentorship. All right. So what we're going to be going over here, I'm going to give you guys some basics, just basic run throughs of what we're doing here, right? So some stuff that you can go through and apply to any trading strategy. And then kind of going to talk about candlestick patterns. Okay, so I'm going to kind of give you some tidbits of stuff just to like lay the groundwork, right? Okay. So first of all, these are kind of just going to be notes that you can write down. They can be used for any trading strategy, work for really anything, right? Okay, so first things first, risk to reward is everything in trading. Okay, so what I mean by that is whenever you are trading, whenever you're taking a trade, you need to make sure that your risk to reward is on point, meaning that when you take a trade and you're risking $100, $1,000, whatever that may be, you want to make sure that your reward is at least 3 times the size what you're risking. So if you're risking $1,000, you need to be making $3,000 as a result. You need to, so if you're risking $100, you need to be making $300 on the next trade. At the very, very least, you need to be making at least 2 to 1. So if you have $100, if you're risking $100 in the trade, that doesn't mean you're putting in $100. Like if it's a swing, it's a little bit different, gets a little more complicated, but like, let's say just stick with the day trade idea here. Okay. So let's say you take a trade, you put in $1,000. You're planning to risk 10%. So $100. Okay. Your stop loss is at 10%. That's all you're going to be risking. And so what you need to see is a $300 profit or 30% risk to reward. It's really easy when it comes to options because you can do it based on percentages. So like if you're risking 10%, you need to be making at least 20, if not 30% return. Okay. This is the only way you're going to stay in the game. Okay, too many people, and I like that a lot of the people that are in here are not within the signals chat because they know, but like a lot of people come in with the perception that you think that win rate matters when it comes to trading. I can lose 20 trades in a row and I do not care because all my other trades are going to be like, I prefer 5-to-1 risk to reward when I'm looking for a trade. So if I'm risking $1,000, I need to be making $5,000 as a result for this to be even worth it for me, right? At least $3,000, right? That's my perspective when I'm looking at taking trades. You have to have that perspective when you're going in and trading. Does not matter about win rate. I will tell you so I've read countless trading books about professional traders, ones that work at hedge funds, ones that work at individuals, so on and so forth. The best win rate typically, so they did a study. This study comes from the book Best Loser Wins. It's one of the ones I read recently, so it comes off the top of my head. Full hedge fund, very successful, hundreds of traders within this hedge fund. All of them making money, right? They're all traders. They're all making money. Okay. So what did they do? They basically they had an interview with the hedge fund manager, the owner, and said, hey, what is your best trader's win rate? Best trader, absolute best trader, 60%. The best win rate that any trader had was a 60% win rate. And these are professional traders trading within a hedge fund, trading millions of dollars. The best win rate they had was 60%. Okay, let me tell you one more story. There's another guy that made 400 million. I can't remember his name off the top of my head, but you can look him up, Google search it, whatever. He made 400 million in trading and he had a 5% win rate. I know that makes no sense to you, but it may not make sense to you right now, but what it comes down to is all risk to reward. This guy he won 5% of his trades. He lost 95% of the time, but his winners were so big that completely wiped out and didn't even matter how many times we were losing. And the key is that his losers were so small. Okay, so that leads me into my next point. That's a little bit on risk to reward. Basic idea. Win rate means nothing. Win rate means nothing in trading. Okay, absolutely nothing. I can't stress it any more than I can't stress it any more than I'm doing it right now. Win rate means nothing in trading. Okay, so let's see. That's that. I can't stress that enough, and that's the number one point I wanted to bring up. Win rate means nothing. You can lose. You can and that brings me to the next point. The only thing you can control in the market is how much you lose. I'm not saying how many times you will lose. I'm not saying how often you will lose. I'm saying that you can only control the amount of money that you lose. Sure, there will be times where you take a swing trade and lack of better terms, shit hits the fan and you wake up, you're down 50% and you were only intending on risking 20% because some bad news came out, blah, blah, blah. Yes, that will happen. Things like that will happen. Okay. But the fact of the matter is, you can only control how much you lose. You can't control how much the trade goes in profit. You can't control how much it goes in profit. You can't control how big the winner is. You can only control how much you lose in the trade. That's all you can control. That's the only thing you can control in trading. How much you lose per trade. You can't control if this one's a winner, that one's a loser, how big the winner this is, how small the loser. That's the only thing you control. Loser. How small is it going to be? Is it going to be a $20 loss? Is it going to be a $100 loss? Is it going to be a $1,000 loss? It all depends on your account size, right? And kind of like a rule of thumb I like to use, I don't like to lose more than 2% of my account per trade. in this way. So if you think about it, if I'm only losing 2% of every trade, what does that do for me? Well, I can be wrong 50 times in a row before I blow my account. And that's what I learned from the very beginning. Like that's how you stay in this game longer. You only lose 2% of your account max. You can do smaller than that, 1%. What I'll typically do is if I go on a losing streak and like my swing trading recently, I've been on a little bit of a losing streak. I've had probably 6 swing trades in the past like 3 weeks, and I think I've hit one of them. And so what I noticed was I said, okay, what I'm gonna do is I'm gonna start sizing smaller. I'm gonna size smaller into these trades because I've been on a little bit of a losing streak when it comes to swing trades. My day trades have been completely fine, and I'll size up as I'm doing good with my day trades. But my swing trades, I noticed, okay, this one ended up being a winner, but I didn't hold. Like IYR, I took calls on real estate a couple weeks ago or last week, and it went down 20%. I cut the trade. Next thing you know, 3 days later, it was up 200% or so. And that's just the way it is sometimes. You're going to get faked out. But what I noticed was, okay, I've been taking a couple losers in a row. Let's go ahead and scale back. So now I was doing this 2%. Now I'm like, okay, until I start to feel like I get my groove a little bit back, let's go 1% on swing trades for now. 1% of my account. And max out on my max loss 1%. And that's transparency. Like my swing trades, I've been picking the right plays. My psychology hasn't been there. And so what I've been doing is scaling back, saying, okay, I'm going to lose maximum 1%, maybe even 0.5% on this trade, depending on how I feel about it. And I'll just scale back. As I continue to lose, I will scale back further and further. As I continue to win, I'll size up more because I'm more confident, and you have to feel the way you are moving within the trading system. But when you are first a beginner, just stick with a common platform, like 2%, 1%, just stick with it and have a strategy, stick with it. That leads me into my next point. Do not strategy hop. Okay, I know I can almost say with confidence that I know probably every person that's been in trading in here for a while has bounced in between strategies where you started on one, you went to the other. You lost a couple times on this one. All right, I'm gonna move to this strategy now. Oh, I lost a couple times on that one. Okay. Oh, I won a few times on this one. Oh, I'm gonna move over to this strategy, or I'm gonna stay on this strategy for a little bit. Oh, you take 2 losers on this strategy. You're like, okay, I gotta go to a different strategy. And then you start trading this other strategy. You have a couple losers and you're like, all right, I got to go to this other strategy. Just stick with one. Stick with one. Spend some time with it. Get at least 20 trades under your belt of trading this strategy to perfection. And then let me know. Let yourself know. Mark it down. Write it down. How's it doing? How's your trades doing? And just stick with the strategy for the time being, right? Just stick with it. See how it goes. Let it play out. Go over the course of 20 trades. What I would really say is go over about 50. Go to 50 trades in a row. 50 trades in a row where you're trading the same setup every single time. And then when you see you're losing money, not because of your psychology, because there will be times where your psychology is messed up and you are trading you're trading the strategy, but you stop yourself out early because you get scared, or you're trading the strategy, you get nervous, so then you do this, and your psychology gets in the way. Don't let that affect your data when it comes to putting your trades together, right? Don't jump in between strategies. Don't change in between what you're doing. Stick with it for 50 trades and trade it till you get it to perfection. And then once you get there, reassess after 50 trades, 20 trades. I would say 50 to 100 is probably a good number to have a good idea. But trading it in perfection, it takes a while to get perfection in trading a certain strategy. It takes a lot of effort, a lot of practice, a lot of mental psychology to just say, okay, I'm trading this strategy. I'm staying here and I'm going to stick with it. I've lost 5 times in a row, but no, I'm going to stick with it, right? You got to do that. You have to do that. You have to let it play out, okay? And so next thing is strategy hop, right? So don't strategy hop. Do not strategy hop. Stick with one strategy until the data proves that it's wrong. And you say, Brad, how do I track the data, or how do I know if it's not working? Okay, so this leads me to my next point. Journal every trade. And I'm going to put that in all caps because it's serious. So when I kind of putting it this way, you want to take screenshots. You want to take screenshots of the chart that you took the trade so you can reevaluate it and go back to it later. So then when you get this collection of data where you've done 30 to 50 trades, and now you see all these trades you've done, you can go back and look and say, okay, I was wrong. I was wrong this amount of times. Okay, what happened in my winners? What did I do right in my winners? Okay, what did I do wrong in my losers? What's working for me? What's not? If you don't take screenshots, how are you going to see what the chart looked like back then? You're going to have to go back on the charts and try and find where it's at. No, just take screenshots and keep track of it day to day, every single day. Keep tracking what you're doing, and then also include your emotions. Track your emotions. So this way you can say, okay, I did bad on this trade, not because the setup was wrong, but because me mentally, I was not there. I was not trading right. Like my head was not there. I was trading the wrong way. And I just didn't do it right. Like I didn't trade right. That's what you do. You just go back and track your emotions, and you can say, oh, okay, I see this trade worked out, but I lost on this trade. It was a valid setup. It was good. It all looked good. And then what ended up happening, your emotions got in the way. Your psychology got in the way. Okay. So you want to track take screenshots, emotions. If it was, you want to track your risk to reward on it. So like not based on what you said you were going to do, but based on what you actually did. Like it's one thing to say, okay, I'm going to buy it at 50. My stop loss is going to be at 40 and my target is 100. But then you sell at 55 because you get emotional and you're scared. Mark that down, write that down, put that in your notes. It's okay to be wrong. Like it's okay to screw up. It's going to happen. Like you are learning how to run a business. You're not going to be like what you're doing when you are trading. You are developing yourself into a business owner. You have to learn the ins and outs of the business. You got to learn how you're doing this. And the only way you're going to do that is tracking your stats. NBA players, NFL players, all these people, they track their stats. They look at their competition stats. They look at what they do on a day-to-day basis. They track their stats and say, okay, I did really good at scoring, but I didn't pass the ball worth a shit. I didn't pass at all. I need to start passing better. I need to be a better passer. I need to get more assists, or I need to rebound more. I need to get more steals. You don't know that. They know that because they track their stats. They keep track of what they're doing. So when you pay attention to the risk to reward, be real with yourself. Okay, I was risking $10 to make $50, but I ended up only taking $5 profit. You need to be real with yourself because that will reveal itself over time. And you'll say, okay, I'm still losing money, but these setups are winning. So there's another stat that I read about also from the Best Loser Wins. Okay, so these numbers may not be exact, but okay, so they tracked all the losing accounts. All the accounts that were losing money is through IG Brokers, which is one of the biggest platforms in Forex trading, or CDFs. And it's just a type of trading. It's similar to equities and options, stuff like that. They tracked these accounts, the winners, the losers, the people that were making, they tracked the losers. What was being shown in the losers? What happened? The losers, the people that were losing money in their accounts, and this is how powerful the risk to, or the win rate doesn't matter. They looked at the stats of these losing traders. 70% of their account holders were losing money. But they had a 60% win rate. It was like they had a 60 to 70% win rate. They were winning a majority of their trades, but their losers were 2 to 3 times bigger than their winners. So these people that thought they were really good at trading make a call like I'm right 60% of the time. Well, yeah, because you probably took it after being up 1%, or like you were risking 20% and you took profit at 5%. And they basically what they were doing is not letting their winners run and letting their losers run. And they were taking profits prematurely. And so that just goes to show you like 70% of these people's accounts that were losers, but they won 60 to 70% of the time. So win rate really means nothing. So make sure to track your risk to reward. And then also why you took the trade. And then lastly, basically why you took the trade, basically what's your setup, right? What is your setup? Lastly, outcome / results. Okay, so I'll show you guys this real quick. So I'm gonna put this on pause. Everybody good so far? This making sense? You guys getting this? Let me know in the chat if you're getting this. Just give me okay, yes, good. Okay, cool. Okay, so this is personally how I track my my stats here. So here's basically one of my trades that I took July 12th, 2023. And I took 2 screenshots because I was using 2 time frames to trade this. Okay, so basically what happened is you can see I have my breakdown. So the hourly and the 15-minute were in a squeeze. I noticed the EMAs were crossing bullish. I actually just talked about this in my the last class that we had for the signals chat. This was one of the trades we were talking about. So we had an hourly and 15-minute squeeze. I noticed the EMAs across bullish. This is the 4-hour time frame. We crossed bullish, and yeah. So what I was looking for was I break it down. Noticed a retest of the EMAs and holding. Once we got another pullback to the 2021 EMA, took my entry, had 10 contracts. Initial spike up. I sold 2 out of 10, and then once we broke below the 9 EMA on the 15-minute chart, so I took entries right around. Make sure this is this is the hourly. Maybe I have the 15-minute down here. Yeah, okay. So this is the 15-minute chart here. And so I took my entries initially right around here. I'll zoom in a little bit. So I took my initial entries right around here. And then once we had this spike up, I sold 20% or 2 out of my 10 contracts, and which netted, I don't know the math. I can't do these numbers right here. I don't want to do them, but you get the point. I was in profit. I trimmed some. I was looking for way bigger of a move than this. And then once we broke back below this 9 EMA and had a close there, I decided to take the rest of my profits. So I was here. I took my entries right around this 21 EMA. We popped up, took some profits, pulled back, sold the rest of my contracts. And then you can see, let's see, re-entered the play on a bull flag. Re-entered the play on the bull flag here. So look, notice how I can go through this and remember exactly what I did, right? So bull flag here, re-entered my position, bought right around here in this bull flag, had this breakout and sold here. That's why I put these arrows here. I took my entry right here. I sold up here. And then, so yeah, so basically what happened was I sold some of my contracts here, got a little emotional, sold some contracts here, decided to re-enter because the play was still valid. Boom, we had the move I was looking for, and I sold out of my position for profit. And then we had CPI the next day, and I didn't want to hold through it, but this was right near the close. That's why you see these candles getting really small. But yeah, so that's basically what happened. This is how I track all my trades. So I break it down. I talk about how many contracts I had, how I scaled out, broke below the 9 EMA, sold them. You can see we also began a trend change on the 4-hour time frame with the EMAs crossing bullish with a squeeze. Okay, win. And then I put a little side note. Should have held to my target. And then you can see, then I broke down the next trade, same thing. Pulled back to the EMAs, started to pull this or form this falling wedge type deal, entered more contracts, held my position. I should have held, my position, first go. See, I put this in my notes. I should have held it in my first go around as the hourly squeeze had yet to fire off. So we had CPI coming up, which caused a big spike the next day. So just so I had an idea of why I sold here. I didn't want to hold through the report. I decided, okay, this is when I'm going to take profits. It hit my target. I was looking for this move up and boom, we took profit. Okay. And I do this in a Google Doc. So then that way it can I can take a screenshot, throw it in there, put my information in, and then it's just a continuous scrolling document that never ends. And I can have it on my phone. I can have it on my computer, and I can go back to it and it auto saves for me so I can refer back to it whenever I want. Okay. So that's basically the idea behind journaling every trade. Okay. So I'm going to talk a little bit more about risk to reward, and I'm not going to get into candlesticks, I don't think, today, based on the way I'm moving along here, which I think this concept is more important anyways. So talking about risk to reward. So to put this into perspective, this is kind of from a book from Mark Douglas. I believe it was either in the discipline, it might have been in both the books, honestly. I'm rereading one of them now, the Discipline Trader I'm rereading right now. But so he kind of talks about this point. It might not even be from that book, so don't quote me on that, but it's a good concept to understand. Okay, so if I had, and you guys be active and responding, let me know if this makes sense to you, right? Okay, so if I came to you and I was like, hey, let's do a coin flip. And if it lands on tails, you get $10. And if it lands on heads, I get $10. Would you take that bet? You basically got a 50-50 chance of making equal and losing equal money. Would you take that bet? No. Okay. Some people are saying no. They wouldn't take that bet. Okay. So what if I said to you, hey, I got a coin flip for you. If it lands on tails, I will give you $50. But if it lands on heads, you give me $10. And you can play as many times as you want. So if it lands on tails, you get $50. If it lands on heads, I get $10. Would you do it? Yeah, of course you would. Of course you would do that. And that's what trading is. That's what trading is. And it becomes that simple. But the problem is, it's not like sports betting where you bet and then when the end of the game happens, like when you get to the end of the game, it gets you have no choice. You put $50 in and you're risking $50. You can't change. You can't decide, oh, I don't want to take this bet anymore. I'm going to get out of this bet when it's in the third quarter. Right? Like your team's up in the third quarter and you're like, I want to get out and I want to be done with it. No, you have to wait till the end of the game to see the end result. That's the difference with trading. You don't do that when you are trading. Like people won't do that when they're trading, and that's the difference. And that's kind of the concept of, and we'll put it here. Let your winners run, cut your losers short. This is a cliche, and people don't tend to not explain it, and I'm going to explain it. Okay, so think about it. When the tendency of what people do with human emotions is because when you're up on a trade, you don't want to lose that profit. You're up $100 on a trade. You don't want to see it go back to zero and you lose that money in your account. You don't want to see that happen. So your natural tendency is, I'll get out while the getting's good, right? I'll take my profit when the getting's good. You'll do that. But what you'll do is, what other people will do is they'll do that. But then when it comes to cutting their loser short, they will basically say, oh, I'm already down $100. What's another 50 if it comes back my way and I don't lose anything? I'll get back out at break even. Or when it gets back to break even, I'll get out. People do this all the time. And it's the exact opposite of what you're supposed to do. And it's so hard. It's so hard to do. I'll be the first one to say it. It's hard to do. It's something you have to practice over time. You just got to practice at it, practice at it, practice at it. And so the real concept you want to go is, how much more can I squeeze out of this winner? It hasn't hit my target yet. Let's let it keep going. The only way you're going to get that $50 on that coin flip versus losing $10 in trading is if you let it go to your target. So if you say, okay, I'm buying this stock at 50, my stop loss is at 40, and I'm betting it's going to 100. The only way you're going to get that same idea with the coin toss is if you let it go to $100. And sports betting forces you to do that. It forces you to wait to the end of the game to see the final result. Trading does not. You can get out at $55, you can get out at $60, you can get out at $70, you can get out at $75, you can get out at $95. You have the ability to, the market is always ebbing and flowing, and you get to decide when you get in and out. It's continuous. You're the one that gets to decide when I'm going to start playing the game and stop playing the game, essentially, is what it is. And so the tendency you need to start getting is not ignorantly letting your winners run like, oh, it hit my target, I'm gonna let it see if it goes even further, or like the stock is extremely extended and you just want to hold it, or you had no plan. No, you need to have a plan. When you let your winners run, there's a difference between trimming out and trailing with stops versus just being ignorant and just have no target in mind. You're up 200% and you're like, oh, I'm just going to let it see how far. Like, no, you can't do that. You have to have a plan before you get into the trade. So that's the next point. Have a plan before you even enter the trade. Okay. So this means you know when you're going to get in before you even get in. You know when you're going to get out before you even get in the trade. So all this needs to happen before you get into the trade. You need to know when you're going to get in, what you need to see in order to get in, what you need to, where you're going to take profit if it hits your target, and where you're going to stop out before you get into the trade. All of that needs to be decided. And also, most definitely, you need to know, why am I taking this trade? Like, why am I taking this trade in the first place? And then you journal all of this stuff. You journal it all out. And then you look over your results over those 30, 50, 100 trades, and you say, okay, where did my big winners come from? What did those charts look like when I had these big winners? Okay, where did my losers come from? What happened in my losing trades? And you just go from there. And you make decisions based on that. All right, guys. So you guys have any questions? Any questions, or are we good? This is kind of the intro class, just a lot of psychology stuff.
I have a quick question.
Yep.
Hey, this is Harsh. But so I heard you talking about EMAs. What EMAs do you normally use to enter or exit a trade?
So personally, I'll use the 8, 21, 34, and 50. The class that I just did before this one was explaining all of that, like explaining exactly the EMAs that I used, why I use them, how I use them to enter trades, stuff like that. I actually just broke that down in a class for the Signals chat. So if you want to get that full video, just go ahead. There's a 7-day free trial. It's completely free to join. So yeah, in the chat, there's a spot called the Signals sign up, and you can go there, 7-day free trial, and you can sign up for free. Watch that video. If you decide you want to stay in, you can. If you decide you want to get out, I mean, it's completely free. You can go snag that video if you wanted to.
Gotcha. Okay, thank you.
Yep. Any other questions, or are we good? Silence assumes that you guys are good. All right, then. All right, guys. Well, thank you for coming. I will, yeah, like I said, if you guys want to get into the Signals chat, we call our trades. We call our trade alerts, we give in-depth analysis, we break down everything we're doing, our game plans behind everything. We got 3 different analysts in there. And then we have more in-depth analysis and education classes in there as well. I just started a new series called Catching the Bigger Move, which just came out. We just started that actually today. That's what I was just talking about. So if you're interested in getting in on that, we're going to have once a week class on those, and then we're going to continue to do these what's it called, the back to the basics classes. So thank you guys for coming. Hope you enjoyed, and same time next week, I'll be here 8 p.m. Eastern time, and we'll be back to the basics class number 2. All right, guys. Thank you guys for coming. Have a good night, and I'll see you for the markets tomorrow.